to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back. 2024, episode 114. AJ's here to make everybody a better investor. Good morning, AJ. How you feeling today?
Hey, Sip, I'm feeling actually very good today. The sun's out. I'm stoked.
The markets are back. We've got some news hitting the headlines. We're not hitting all-time highs, which is what we talked about last week, right? But I think the big storyline of the day so far are the unemployment numbers. So let's pull up your charts. Where do you want to begin? Where are you feeling the most love? We called a little bit of the pullback, but is it enough?
Well, we'll start with employment numbers. So today we got our employment situation numbers for December. And, they came in pretty good, right? The non-farm payrolls were up above expectations. The unemployment rate was down below expectations. But to be honest, and I like to look at participation rate, it dropped a little bit. Um, to be honest, when you take a look at how November's numbers were actually revised lower this time around, and you look at December numbers, it was not like a super stellar employment report, which would have caused some alarm bells. And if I back up a little bit, yesterday we got the precursor to today's employment report. We got the ADP report, which is done by kind of a private group, and their report isn't the gold standard. The gold standard, of course, is the one that the government does, but theirs gives kind of a preemptive idea of what the governments might do. Excuse me. And so this report, this ADP report that came out yesterday, along with the jobless claims, kind of made investors think that today's report would be not just above average, but like way above average, which kind of raises alarm bells. It's where too much good news is kind of bad news, because that means that the Federal Reserve will want to put on the brakes some more. And that's actually been the sentiment, Sip, this whole week, is that folks think that the Federal Reserve might want to put on the brakes, or may resist putting on the gas. So I'm talking about interest rate hikes and drops. The prevailing sentiment last week was that the Fed was going to start lowering rates in 2024. Maybe not in January, but as early as their March meeting. But then these meeting minutes came out Wednesday afternoon, which kind of give you the insight, like what they were actually saying 2 weeks ago during their meeting, not just what they said at the end of the meeting. And they weren't as dovish as folks wanted them to be, right? These meeting minutes actually basically said they were all in consensus that there may need to be more breaks being pushed in the near future. And so that kind of scared a few people, and that caused, along with some Middle East tensions going on, if you take a look at the S&P 500, it caused a little bit of some profit taking, which, like you said, we forecasted. But today's employment reports kind of took the edge off of that. But I'm not sure that the profit taking is over.
Yeah, and it looks like we're hugging that 4,700 level right now. And
Right.
based on, I know sometimes you use some like Fibonacci retracements and stuff. Do
Yeah.
you see a lower level for us to potentially pull back if we continue to get right? And the sentiment is, if we get good economic news, that means that the Fed isn't going to lower rates as quickly. Therefore, that's not
Mhm.
good for the market. So we'll get more of a pullback.
Yeah. Possibly. Here's a couple of data points, and then we'll look at kind of my thoughts. First of all, remember last week and I think I confused a couple people, so I did it a little differently using the CNBC tool. We were talking about bond rates and how there's this thing called an inversion in the yield curve. So I put in here just the listing of the bonds, right? The 1 month, that means you're only giving your money to the government for 1 month to use, and then they have to your bond matures. Here's a 6 month, 1 year, 3 year, 5 year, 10 year, 20 year, and the 30 year bond, right? And so the common sense thought is if I loan my money to somebody for a longer amount of time, I should get more money in return, right? Well, yeah. So if you take a look here, you can see the rates that are currently being traded. The 1 month is at about 5.4%. The 6 month is about 5.25%. The 1 year, 4.8%. The 3 year, 4.1%. The 5 year, only 3.9%. Same with the 10 year, about 3.9%. Then it starts going back up. So what this is actually saying is, you get more money if you loan your money out for a shorter amount of time, and that's kind of a bizarro way of looking at it, but that's how folks are trading up these bond yields right now. So this traditionally, and I'm not saying it's going to happen this time, but this traditionally happens ahead of a recession or even a depression. So, you know, give that a little bit of thought because, as much as in the short term, investors are always thinking about, these rallies, the underpinnings of the market are showing historically weird signs that in the past have led to, recession. And then we talked about how the FOMC meeting minutes were not as dovish as expected, that they talked about even raising interest rates more. So I wanted to look at what investors are thinking that the target rate will be at. So January, pretty much, and this hasn't changed, investors believe that they're going to be in a holding pattern in January. They're not going to change rates at all. But in March, we previously had seen that investors thought, almost without a doubt that they were going to drop a quarter rate point. And if you compare that to what it was last week, there's a lot of belief that maybe, it's starting to jump ship here, and people are a lot of investors are saying, well, maybe there's a hint that rates will stay unchanged in March as well instead of dropping. This is dropping and this is unchanged, and this number has been going up and this number has been going down. So, in other words, basically the Fed may not be as aggressive at lowering rates as previously thought. Same with May and June, right? So that's another data point to keep into consideration. This data point just shows that the Fed continues to do that quantitative tightening. They expect to keep doing that until they get down to the $4 to $5 trillion mark. At least that's what they've said. So with all of that kind of positive and negative news or history, if we take a look now at the S&P 500, we got confirmation just this week on Tuesday, January 2nd. We got confirmation that the high close that we saw on December 28th last week was our top. We got our reversal. We've been looking for that, right? Because we've been on this rally, but this rally is just that, a kind of rally. It's not actually an uptrend as we like to define uptrends. And so when investors can't actually define something as an uptrend, they don't want to put their medium to long-term money into that direction. So we got our top. So now we can, like you were asking, we can go ahead and define our levels for the next reversal. And the next reversal will pretty much tell me and many other investors, they're going to tell us pretty much what's going to happen for at least the first half, if not all of 2024. So we need to pay attention to where the next reversal happens. And you can see I've got my little levels up here. If my reversal happens somewhere between this 4,370 and 4,530, so if it happens in this magenta zone that I have on my screen, I'm going to be full on like looking at how we can trade the long-term uptrend. That would be a signal of a strong uptrend. It would give us a mature uptrend, no more of just this like temporary rally. We'd be all in on an uptrend. If this pullback overshoots that magenta zone and goes into this red zone between about 3,960 and that 4,370 zone, if it goes into this red zone, then I'm going to be thinking all about we're going to be in this sideways choppy pattern for all of 2024. And of course, if by any chance we dip down into this green zone down in 3,960 or less, I'm going to start, putting on my galoshes because we're going to be in the poop for a while. It's going to be a full-on downtrend. So I'm watching where this next reversal occurs. And some people say, well, what happens if you don't even make it to your magenta zone? If I don't make it to my magenta zone, then I know that there's this just unexpected bullish sentiment. It means a continuation of this uncertain rally, and it really gives us no information. It basically means we're still in limbo. So I don't actually expect that to happen. I see we have this one-day pop on the employment numbers that came out this morning, but I don't expect that to hold. I still expect a little bit more profit taking in January. It's just where do we land in this magenta, which would be good for the bulls, this red zone, which would be good for the premium sellers, or this green zone, which would be good for the bears. So we're just watching that, Sip.
Yeah, and I think that's a good way to kind of give oneself a little bit of time to let this evolve, especially in a new year. I mean, it's the first week of trading, right? And the indicator that you have there, actually, we're going to go over some of the methodology behind that in a few moments. But another note that I continue to hear or on the news this morning is that this type of market setup is great for covered call writing and premium selling. And for anybody that's watching or joining us for the first time, that's a core basis behind you, AJ, your methodology and what you teach your community. So could you give a little background to why it's good for premium selling and covered call, and then we'll go into some examples later on in the show. But looking at a setup like this, if people like to go long, why are options good now, right? Let's, to the newbies out there that don't know what to do, but we can sense the market might have to come back a little bit.
Yeah. No. So, covered calls. So first of all, we've got these screeners that we have for our users, our program participants, the people who are actually learning from us. And I have to say that with this pullback that's been happening this first week of January, all of our screeners are producing all sorts of candidates for that same reason you said. This makes for good premium selling. So here's an easy way to think about it. If you are long some sort of symbol, and that's the traditional way people invest, right? They buy something at a low and then they hope to sell it at a high. But sometimes the market pulls back, right? And you don't necessarily want to sell. You like what you're holding on to. You kind of have this bias that it could even go higher in the future. One of the things you can do is create a little premium. So if I decide to sell some premium, some option premium, What this does is it has a deadline, a little timer, and I'm going to show a little clock here. And during that time, and usually folks pick a strike price that's above the high of whatever symbol they're trading. During that time, the person who pays you a little bit of money, they have the right to pay you this higher number, whatever the strike price of that option is, in order to get your stock. So in other words, they pay you a little bit of premium, right? For the right between now and the expiration date of this option in order to buy you out of that stock. And they would have to pay you whatever the strike price you guys pick to negotiate on. And these are all standardized contracts. You don't have to go to your lawyer or anything like that in order to negotiate this thing. You can just buy them on the open market. The cool thing is if you're seeing a top, that usually means that you can get some money for selling that option as being the stockholder, and the likelihood that the person will want to exercise you at that strike price because the stock is now going down. It's better for them in the long run to buy it at that cheaper price, right? Than for them to pay that higher price. So they're going to probably let that contract go unexercised, or it's going to expire worthless, which means you just made a little bit of money while waiting for your stock to resume going up. And that's kind of the whole basis behind selling call premium. And it must be said, Sip, that you can also do this in reverse. They have these things called puts. And so if you're short a stock and then something stops going in the direction you want to, instead of removing your short position, you could actually make some money by selling those put premiums. So here at Trading Trainer, we do a little bit of both of those,
Yeah, and I love the drawings because it really does help clarify that I already own this stock. It looks like it's topping a little bit. I can make up a little bit of that pullback if I sell this call or this insurance premium, right? And so
exactly.
right now is a real good market for that basic conceptual approach to premium selling. So
Yeah.
with that being said, we're going to go ahead and give everyone a chance to dig into this a little bit more, to spend, I don't know, I think maybe this session's like 45 minutes, to spend 45 minutes learning, 4 variations of this strategy and incorporating it into your investment portfolio if you haven't already. So the link to check out AJ's daily free daily workshop is in the chat. We're going to go ahead and take a break here in a second. We are streaming live, so if anybody has a ticker or a question that you want AJ to answer, feel free to throw it in the chat and we'll see if we can cover it. Otherwise, we're going to take a break and then we're going to come back and dig into your indicator. I feel like it needs a name of some sort because it's just right now it's the AJ indicator, but we might need to think of something cool.
Yeah.
We'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So, man, we've been talking about your indicator for what, like 3 or 4 months now? How long have you had it implemented?
I think it's about 3 or 4 months. Originally, this indicator, Sip, we called it the confirming retracement indicator, for lack of a better name, because it confirmed for us. It was originally designed for looking at the broad market. And we've been updating it and revising it. So if you haven't gotten the most updated version of that indicator, you can go ahead and get free access to our web portal. It's available to anybody who gets free access to our web portal. You can go in there and download the latest version. but it's kind of morphed into more than just a confirming indicator for the broad market. A lot of folks now use it as their end of day indicator for trading premium.
And so, why does it work? What's the basis of it? That's kind of, I
Mhm.
think, I mean, maybe you don't want to give away all the secrets behind it, but with your 20 years of experience, is this kind of the cumulation of all those things that you've seen work in the past, kind of coming together in a simplified way to help you answer reversals, right? Because think that's kind of the basic logic of it.
Yeah. I mean, we've got some indicators in development that will probably offer not for free that incorporate a little bit more, but this has the basis in it of the whole thought behind leading followed by lagging indicators, right? So if you've been a technician at all, you know that a lot of time leading indicators are misleading. I like to call them almost misleading indicators because they're built on the idea of being overbought and oversold. And the main flaw in that concept is that things can remain overbought and oversold for a long amount of time. So you don't really want to use a leading indicator as a signal to do trading. People who do find themselves often white knuckling their chair for many days, if not weeks or months, because being overbought or oversold isn't the end all to be all. However, taking something that's overbought and oversold and then seeing a lagging indicator kick in, a confirming indicator, that usually is a very viable signal that's been tested time in and time out. And that's the basis of this indicator. It's a confirming indicator. And we've got a couple of different very popular variations in it. You can see I've got my confirming indicator 3 times on this chart with 3 different configurations. Like if I pull up just a generic stock here, we've been looking at Zoom in the past. Depending on what fits. So right now we've got our indicator configured for determining bottoms and tops in the broad market. The big idea, though, is that you might use a different setting of this indicator for an individual symbol. You want to kind of match that. So, for instance, I'm going to turn off the indicator that we use for identifying tops and bottoms in the broad market. And instead, I'm going to turn on the indicator that probably works best with Zoom. And so, you've got your choices of lagging indicators. You could use a moving average crossing or a MACD. And then what's unique about my free indicator here is you can choose how price is calculated or how the indicator is calculated on which price. You don't have to use the closing price, which is what traditionally is used. So you can choose, and I like using, for instance, volume weighted average price, or I like using this for historical volatility, the high-low close divided by 3. And this gives you that flexibility to do that. And then you can definitely program in any sort of, parameters for any confirming indicator and then go with it. So for instance, on Zoom, we got an indication last night that we had a reversal, not last night, I'm sorry, on the night of December 28th. And on December 29th, we got our follow through in order to get into that trade. And so people who followed me into that trade, and I'm wondering, we talked about Zoom. Maybe some people can type into the chat whether they've either paper traded or real money traded Zoom based on our recommendations. We recommended shorting it or even buying a back month deep in the money put a couple weeks ago. And that came up just this past week. And so, yeah, I'm wondering how many people jumped in on that following our indicator and following our recommendation.
And that looks like a $6 move there on Zoom. All right, so then a few follow-ups, right? So now that we kind of understand the mechanics behind the indicator, Well, I guess people can go and download it in the freebie
Mhm.
section. So the link is in the chat. Secondarily, this is only available for Thinkorswim. Is that correct?
Right now we're looking and having it developed for other trading platforms, but right now it's for the Thinkorswim platform, which is, you can go sign up for a Charles Schwab demo account and get access to Thinkorswim. Just to show people, you get access to our web portal. I'm showing the web portal here, and it's right here under bonus downloads. So you can come down here, click on bonus downloads, and get your free indicator. So it doesn't cost anything to get access to our web portal. You can get free access just by signing up following the link you just put in the chat.
Yeah, and now that I'm a Thinkorswim user, I'm gonna have to go ahead and get that indicator in place because I like the simplicity of it. I like knowing that there's some computation, and I just need that confirmation. So, love it. If you're interested in getting that indicator on your own trading device, head on over to the link that's in the chat. Otherwise, let's head into your pick of the week, AJ.
Oh, sure.
Now that we've got this reversal happening, seems like we've got a lot of good opportunities on the horizon. And so this week,
You bet.
you've got the media mogul, giant content producer, Paramount Global, ticker symbol PARA. What's the down low in Paramount?
Well, Paramount. So I'm going to change my indicator again. So for those of you that are following along with the free indicator, if you're not, go download it. Of course, that's what we've been talking about. But the indicator I want to use here is a little bit slower. So I'm using the standard MACD, right? The MACD. This is Gerald Appel came up with it maybe 30 something years ago. His son, Marvin, Gerald is still around, but Marvin's pretty much taken over their company and teaches about the MACD and further develops it. And they've come up with variations of the MACD. They've got their faster MACD. They've got their slow MACD. They've got MACDs that you trade on intraday charts, things like that. But for this particular Paramount, I want to use the standard MACD. So if you've got my indicator, go ahead and set it up for the 12-26-9. That's the standard settings of the MACD that, out of the box, that's how it's. Make sure they're all exponential moving averages. Don't use any sort of reversal filters. And finally, I like to add in something different than everybody else. Instead of calculating the price on the closing price, I like to calculate the MACD on the volume weighted average price. So once you've got that programmed in, you can just turn it on and it'll give you those end of day signals. You can see that we got this end of day signal on Paramount a few weeks ago, December 18th, 2023, but we really didn't get our follow through signal until I think it was on December 21st. And then we got a couple more, but the key is I don't think that you've missed the signal. Even though we've gotten our follow through, I think there might be a couple more opportunities for follow through. And so that's why I wanted to feature this symbol, because if we get follow through, in other words, we're looking for a second opportunity on follow through, we could either short some shares of Paramount or, and it's at a good price, by the way, for doing that, or you could buy a back month deep in the money put option. Go at least 8 months out. I'm actually recommending using the January 2025 option, probably with the $25 strike price. So very deep in the money, very far out in time. This would be our back month option. And that would be a wonderful substitute to shorting the stock. So if you don't want to short anything, if you don't have a margin account, you could instead buy this put option, and that'll make money as this thing moves down. Now, of course, if you are one of those people who has owned Paramount for a while, if you had bought it when we got that other signal back, this was in the beginning of November, that said, hey, we're at a bottom, you should buy shares of Paramount, then this would be a great opportunity to sell that premium, which a lot of people are jumping on board selling premium. I'm actually recommending that if you own the stock and you're looking to sell premium, maybe what you're thinking about selling is the January 2024. So that's expiring just in a few days on January 19th, the $15 call. So that's the call that's right around the $15 strike price. If you want to go higher, you won't get as much premium, but you'll be locked into that symbol. So whatever makes sense, but I'm saying the $15 call. And I'd like you, if you sell that premium, to protect your position by buying a protective put. So you want to go a little bit further out in time. You don't want to be near term with that one. I'm actually recommending using the April option and use either the $11 or the $10, depending on how much protection you want. If you want more protection, use the 11. It'll be a little bit more expensive. Less protection, use the 10. But put that protective option in place as well. So do those two trades, and I think you're set up with a nice premium trade that'll profit whether it gets exercised or whether it expires worthless. And I guess the last thing we could do, if shorting it, buying a back month put option is not your way of trading, it won't be long before we get another bottom. So you can be prepared to buying some of this stock. I wouldn't buy it now, but I would use my indicator, just like we got the signal back on November 2nd. Use my indicator the way I told you to set it up on, and you'll be set to go. If you don't, premium selling's new to you, I always recommend paper trading these strategies. Make sure you understand how they work in real time. But yeah, we've got something going on here, Sip, with Paramount.
Yeah, and we're going to try something new out, because in the notes you've gone ahead and laid it all out. So I've taken those notes and I've thrown it in the chat. So if you want to,
I love it.
If you want to dig into the details of this potential trade or investment or setup, check it out there. Also priced very well, right? $14, right? So the smaller portfolios can do something there. And maybe there's also a fundamental play, right? I mean, the streamers heading into the new year, complex market, a lot going on.
It really is.
Right.
I've noticed that some of these streamers are actually selling the rights to their material to Netflix, because Netflix really shot ahead this year as being the go-to place that users go to find their content.
Yeah, and they're all incorporating ads now, and if you want to remove the ads, you need to pay more, right? I know that's a big
higher
Amazon
premium
this quarter, right? And it's like, oh well, the whole point was to not have commercials and ads, is why I'm paying you, right? The evolution,
right?
of
Yeah, no, I think I got that notice from Netflix as well.
Yeah, I'm starting to get the they're starting to cap the users, right? They're like, oh, we don't recognize this device. We're gonna need to upgrade if you want more people. So
It's true.
Although Paramount, I think, was late to the game with the streaming, and their platform isn't bad, but the downfall is it's mostly Paramount produced, unlike Netflix that's getting content from really all over the world. Like, I don't know if you've noticed, but I watched this German, it's called Berlin. It was top 5, and I swear to God that they took AI and just pasted American words over their mouth, and you can see when they're speaking that the mouth is off, but it's so close that it you don't believe it, right? It was pretty wild.
Wow, that's cool.
And that's just the AI discussion, right? All right, so that's AJ's pick of the week, Paramount. Look for the setup in the chat.
A lot of setup.
Now we've got
a lot of possibilities.
Now we've got our speed round. A few names we've talked about over or a couple of names that some of the users have brought up throughout the week. Let's go ahead and start with Tom in Toledo, Ohio, who wants to know about Ford. Ford is a name. Well, we've talked mostly about GM, right? So we haven't dug into Ford much, but Once again, a very nicely priced stock there. What do you see?
It is nicely priced, and I've got a lot of experience with Ford. They've got lots of people trading their options. Hey, so I'm so I still have my standard MACD confirming indicator applied. I almost want to see what the fast MACD will do for me. So I'm going to turn off my standard MACD. I'm going to turn on my fast MACD. So the only difference here is it's still calculated on volume weighted average price. It's still exponential moving averages. We're still not using the 1-bar reversal filter, but this is coming from the Appel father-son team. The fast MACD settings are 6, 19, and 3. So I'm going to turn that one on, and let's see what that tells us. So it gives us a couple of additional signals, which you'll have to use day of trading follow through rules to filter out. But I think that using the faster MACD might be better for trading this particular symbol. So for Tom, I would use a fast MACD, but make sure I get day of trading follow through. Otherwise, don't go through with the trade. So it looks like we did get a top just recently. This was on December 27th. We probably got follow through on December 29th. I don't think it's too late to get that follow through. So in other words, I think that you still have an opportunity to act on this signal. And that's one of the best things about premium selling. You could be so late to the game on the signal and still make the trade totally work for you. So maybe look for day of trading follow through, maybe not today, maybe Monday. But when you have a top, some of the strategies that I like to use are legging into either covered puts. So covered puts, or I like to sometimes turbocharge that covered put by replacing the shorted stock with a put option that's called a bear put diagonal debit spread. So bear put diagonal debit spread. Either one of those would work here. That would set you up. And what that'll do, either one of those trades, either shorting the stock or buying contracts of a deep in the money, far out in time put option, will allow you to make money when the underlying stock price goes down. And the minute it stops going down, that's when you want to go ahead and sell your premium trade and buy some protective calls. So I think you're at a perfect time for the setup. I see why you're looking at this. I think that this, I think you're well off. Now, one other thing, Tom, and I'm not sure of your particular situation. I didn't get all the details from you about, but if you had bought Ford, maybe at the $10 range, now is a great time to be selling that covered call or selling that front month call and creating that premium trade out of it. And the only suggestion I give you is if you sell a protective call or if you sell that covered call, go ahead and buy a protective put, maybe down here at the $10 strike price. Go farther out. I usually tell my program participants 3 to 6 months out with your protective options. And I think you'll be set up for a nice premium trade. Good on you. And for anybody who is watching, I think Tom gave you a good symbol to perhaps pursue.
Yeah, very similar setup to what we just saw in Paramount with very similar pricing. I mean, only off like $2, I think. So very
Exactly.
similar setup and the indicator confirmations. So thank you for bringing that up, Tom. Moving on to our next name. This is Nancy in San Francisco, California, interested in SoFi Technologies. Ticker symbol SOFI. We've ran through this one a few times.
Yeah, SoFi is that company that creates apps and stuff for us to check our financials. Yeah, I like their technology. Let's see. So SoFi is demonstrating that pattern that we like to trade, the sideways choppy pattern. They're not, I usually like to find companies that are making money. SoFi is pretty much just breaking even. I see slight losses. It looks like they'll be having a earnings release coming up. Um, I hesitate to tell you to do some premium trading here. It looks like we had a top signal back on December 29th. And then just this Tuesday, we probably got some sort of short signal. Here's what I'd like you to do. I almost think we want to wait until the next earnings release happens. And then when that earnings release is in our rear view mirror, consider looking for a bottom to actually buy some of this SoFi stock. Either buy the stock or buy a substitute call option. I don't want to short this stock right now. I want to let earnings pass, and then I want to look for a bottom to do some buying. Once I have some stock, I can then leg into a covered call position with a protective put, and I'll be ready. But right now, maybe let's see what happens during the upcoming earnings. And if you're brave, as the upcoming earnings approaches, maybe you take a look at implied volatilities over time. And if there starts to be some aggressiveness on implied volatilities, maybe you consider doing some sort of very fast, like 2 or 3 day trade, 2 or 3 day lasting trade on implied volatilities, like, basically taking advantage of the earnings jump.
Real quick follow up.
Yeah.
Is there any concern in financial names, the financial industry in general in this Q1?
Doesn't seem to be. We had some concerns about half a year ago, maybe 3/4 of a year ago, with some of these midterm banks, losing their capitalization. But when that started to happen, the Federal Reserve and the U.S. Department of Treasury came in very quickly and put patches into the system that made it easier for them to identify these banks and proactively make sure that they're not going to be problematic. So I don't foresee, unless there is a bigger collapse of the financial market. So far, we're okay, Seb.
All right. Thank you for that, Nancy. Moving on to our third name of the speed round. This is Rick in Fort Lauderdale, Florida, interested in Zim Integrated Shipping. Ticker symbol ZIM. This one is a new one for me.
Yeah, Zim, I know about them only because of what's happening in the Red Sea. So there's these Mideast tensions, as you know, this they call it the war between Hamas and Israel seems to be spreading a little bit with, the targeting of Hamas leaders in Lebanon, and then some assassinations happening in Iran, and now Iran has sent a warship to the Red Sea because the U.S. has gotten involved. The U.S.'s biggest concern, of course, is that the Red Sea has a lot of shipping going through it, right? It's a direct way to get, bypass having to go the long way around the world to get shipping. And there's these Iran-backed rebels that have been trying to disturb the shipping lanes. And so the U.S. has been taking actions. I don't know if you guys have been following this, but now Iran is sending. Anyway, because of this, companies like Zim have been getting some. Zim is a shipping company that specializes in high-risk shipping, right? So I don't know what they actually do, what their business model is, whether they're like, crazy paramilitary people who, will go the extra mile to get your shipping to you. But this company is taking off pretty much right now because, there's high risk shipping that needs to be done. And so you either are going to delay your shipping and go the long route around the world, or you're going to hire a company like Zim to get it there on time at any cost, right? So that's kind of what I know about Zim. With that said, you can see that they've gotten a little uptick. They were trading down here as low as $7. They're up at about $14.50. So they've doubled in price. There's definitely some focus on them in the most recent history. So how do we trade this? I think you're too late for taking advantage of this rally. If you had gotten into this rally, if you had some sort of magic crystal ball and you bought them down at the 7, even bought them at the $10 range, I think you're happy. And you're basically going to use a faster indicator. So if you're using my indicator, I would use that fast MACD, the 619.3. And I would look for a top. And when I got that top, I would sell my holdings, right? I think that that's a smart play on Zim. As far as, the other thing we can do is when we do detect that top, because Zim is becoming quite overbought. So it's got that leading indicator telling us that the minute we see a lagging indicator, I would use a slower lagging indicator if you decide you want to short some Zim. So maybe use the standard MACD, the 12.26.9. But when you get that signal, maybe we short some Zim shares. And it's inexpensive enough that that's not a big deal, right? If you've got a modestly sized portfolio or even a smaller sized portfolio, you'd be able to short some shares of Zim. Or let's take a look at the option chain. Yeah, there's definitely some activity on both the puts and the calls. So if you don't want to do any shorting, you could buy a deep in the money, far out in time put option that could then be the coverage for selling put premium in the future. So don't resist the urge to try to buy into this rally. You've already missed the signal. I don't think that you're gonna benefit now. You're buying at a high, right? We want to buy low and sell high. Instead, look for an opportunity to short and make it a very conservative indicator or a somewhat conservative indicator. I'm recommending the standard MACD. And also, if you did buy low, look for an opportunity to sell. That's my 2 cents on Zim right now.
Yeah, and Rick, if you don't know, AJ's not a big fan of names that are in the news, right? And this
No.
one seems like it's being driven primarily by geopolitical tensions, right? Which could reverse rather quickly.
Yeah, I would be more comfortable being in a short position on Zim than a long position on Zim.
If you get the confirmation with the indicator, which we're just going to be looking for that red arrow to confirm that. All right, Rick, thank you for bringing that up. That is a good one to keep an eye on, just if we want to get a little bit of excitement in our day. Ideally, we want those tensions to lessen so that shipping and product and commerce could continue to flow as intended. But that's not the world that we live in. So we're just here as investors to try and take advantage in our portfolios as we can. All right, we don't. Well, maybe we do have one final question here. What's the best way to get in contact with you, AJ? So we'll Boomer Trade. Go ahead and drop your email or send us a DM right now. And AJ will keep an eye out on that. No other names to run through, AJ. What should we be keeping an eye on? What's on the horizon? We've got this pullback that we're watching. Is there a potential catalyst next week that could maybe bring us down a little bit, or are we kind of staying in the range? What are you keeping an eye on?
I'm a firm believer of paying attention to Januaries every year. Historically, how January goes describes how the year goes. So I'm going to be kind of just looking, sitting there, observing what's happening in January. I'm also going to be paying heavy attention on the S&P 500. I'm going to be watching where we get our bottom retracement. I want to know where it's going to be, because I've been trading ever since this rally started in the beginning of November. I've been trading more on the faster paced, nimble approach on show like 110 or something right now. If you guys have been watching us for a while, 114. Holy moly, I can't believe it's been that many shows. If you guys have been following our show, you know that I actually like when things are a little bit more predictable. So I've got my eyes out, SIP, to find out where this bottom reversal happens, and also pay attention to what's happening in January of this year, so that I can plan out a little bit further than, say, 3 to 6 weeks, and plan out more like 3 to 6 months with my trading.
All right. Well, you heard it there. AJ's keeping an eye on January. It's going to be driving the rest of the year, and a lot of decisions from a lot of different parties. If you haven't checked out AJ's daily workshop, once again, the link to that is in the chat. Also, if you're interested in getting a hold of AJ's free indicator, which we don't have a name for, but it's the best indicator in the business. The link for that is also in the chat. And so if you've enjoyed the show, if you're a first-time watcher in 2024, we appreciate it. Hit that follow, hit that like, hit that subscribe button. 114 episodes, which means we've gone over at least 300 plus premium selling opportunities. Well, not necessarily premium selling, but options trading opportunities. And so week in and week out, AJ's working with the team diligently to provide you guys with the best education, the best advice, and the best guidance in this wonderful world of trading and investing. AJ, any final words before we close out?
No, definitely go and get that free indicator of ours. Let me know in the comments whether or not you got into our Zoom position as we recommended. And other than that, no, that all's good here on my side, SIP.
All right, AJ, appreciate it. Looking forward to 2024. Everyone, appreciate you guys tuning in. We'll catch you next week.
All right. Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.